We said whipsaw action. We're looking at it now. Suddenly the Dow has popped to the upside. It's higher by about 18 points. We don't really say a roller coaster day on Wall Street here, but you know what? Today was definitely worthy of something right out of Six Flags.
Absolutely. Everything is suddenly green now. Both the DJ, the NASDAQ, S&P, Russell, it's all green. Of course, so is oil and gold. That's not always a good thing for it to be green. But let us see what our panel thinks of this wild day. We have them all back, including Tracy Burns at the New York Stock Exchange. Trace, let's start with you. What are they saying about this day?
They're saying, holy Dramamine, where is it? That's what they're saying. Everybody's walking by saying, what a seesaw, what a market. I mean, it's been up and down all day, and for a lot of reasons that nobody really knows. You know, a lot of it had to do with the financials. They didn't rally on the news that the Fed was going to inject money. So basically, if the financials didn't come to the party, why should anybody else? And that's kind of what happened today. Because, man, when that initial reaction when the money came in, early this morning, the market rocketed. It was like old school New York Stock Exchange down here. Everybody was running around and all fired up and buying and selling. And then I think the market digested it and realized, you know what, even that's not enough. We still have a lot to do. We have balance sheets to clean up. We have assets to put numbers on that we still can't do that. And the financials did not rally, and as a result, we came back down. Thankfully, we're holding in the positive right now. You know, volume picked up a ton, and the up volume and the down volume are pretty much equal, meaning the buys and sells out here are the same. So there's action, there's activity, but it's still a wait and see. You know, we get Lehman's numbers tomorrow. That's pretty telling. So at this point, I think it's like this, and everybody else seems to agree that it's going to be this roller coaster, Dramamine, Space Mountain from Disney World, Lightning Loops ride till the end of the year.
Space Mountain.
I think you left out one roller coaster, but I'm not sure which one.
That's the one that I probably threw up on, so I'm not going to mention it.
I'd want to forget that one, too.
The Matterhorn, it's an E-ticket, and here's the rest of our panel to talk about it. Nicole.
Yeah, I definitely think, you know, the fact that the financials didn't react was a little bit, I think that kind of set the tone for the day. But, you know, then you look at companies like 3M today coming out and saying, I'm going to have double-digit earnings growth next year. You know, there are some actual happy stories in this market, believe it or not. I mean, we're still going to have to deal with some negative news, but there are some places, like some optimistic spots.
Jim, the biggest question is exactly how the market digested the news of what the Fed did. I mean, we know what they did yesterday with dropping the interest rates. Then we woke up this morning with the idea of this new window that they were opening up for banks as a lender of last resort. What do you think the market thinks of that idea?
I spent all morning, calling people about this. I think people like this idea, but then again, all of a sudden the Fed unveils like a weapon from its arsenal that you didn't even know existed. So they're a little unsure about the Fed. They're a little unsure about the direction of the Fed. So, I mean, that's going to cause a lot of uncertainty because they thought they had it figured out and they didn't. Now we don't have another meeting all the way until the end of January. So until people have a better feel for what the Federal Reserve and the direction of this economy, you're going to get a lot of volatility. So I think, at least I hope I think we're at the nadir of the economy and we'll pick up nicely in 2008.
Peter, it's been quite some time since we've seen this much volatility over a stretch of a couple of months, and it has been a wild ride for the markets. It almost seems that the market doesn't know which way to go. So who's guiding it? How does it move?
Well, I think the volatility might be a sign of, a topping pattern. I mean, it looks to me like we could be carving out a head and shoulders top in the market with a neckline down around 12,500 for the Dow. If we break that, I think we can go to 11,000 very quickly. It doesn't matter how much easy money the Fed is pumping out. It's not going to go into the mortgage market. Nobody anywhere in the world is going to want to lend money to Americans to buy houses. Housing prices are still too high. They're going to fall substantially. There is so much risk in the mortgage market, nobody is going to touch it. They're going to take that money and do something else with it, but they're not going to buy mortgages. They're not going to loan it to Americans to buy houses.
But, Mike, there are mortgages being applied for. There are mortgages being given. Somebody's giving out that money.
Yeah, tell us something we don't already know. I mean, look, you know what I find? First of all, we're so down on ourselves. We're so pessimistic. We hear this sort of commentary, yet what is ironic, we see United Arab Emirates, we see Abu Dhabi, we see Chinese. They're running here to invest. They say our own institutions, our own banks, our own companies are attractively valued, undervalued. Billions of dollars flowing over here. Trade continuing on and on. I mean, why are we so down? This commentary, this sort of stuff that we're hearing day in and day out. And by the way, the market is up 7% on the year. It is not a disaster by any means. I think Jim is right. We're going to have a terrific year next year. The interest rates are reversing a trend that has been in place for the last 3.5 years. You know, Liz, in your interview with Warren Buffett, he said something. You asked him about this rate cut. And he said, you want to know something? I don't pay attention to it a quarter down, a quarter up, a half down. A year from now, you're not even going to know what the Fed... Look, I'm an economist. Sometimes I have to go back through the
I mean,
reports
really,
to
Peter,
find out.
do you remember what happened 13 months ago when the Fed met? If they did, there have been a million Fed decisions. And in the end, just invest the way you should invest, correct?
Sure. And based on what the Fed is doing, you invest abroad, you get out of the U.S. market, you get out of the dollar, you get out of U.S. bonds and U.S. real estate if you can. You buy gold, you buy commodities, you buy foreign currencies, you buy foreign stocks. The Fed is debasing the money, and it's going to have disastrous consequences for
Peter,
people who can't understand
children?
this.
Do you have children?
Yeah, we've established that I have a son.
Well, listen,
yes.
How can you, in any good conscience, raise children in this country if you believe so negative about the prospects of America? At least Jim Rogers, he's moving to China. He believes like you do. Well, I don't understand you.
Give me credit for staying here and trying to help people. I'm helping thousands of my clients.
But Jim, we have to admit, as Warren Buffett told Liz once again yesterday, he's investing here. He's not looking at the changes every time the Fed decides to do something different. He's looking at specific companies and investing in those that look good,
Just
Jim.
not the dollar,
hey,
Jim.
listen,
He's not investing in the dollar.
Right. So, yeah, he's doing what I'm doing.
Right.
But he is investing in dollar-based companies, Jim.
Mostly.
Jim.
Listen, long-term investors should love these kinds of periods because it'll give the opportunity not only to buy the U.S. market cheap, but buy some great companies which are going to get knocked down unfairly with all the rest. Warren Buffett still likes investing in America.
Hey, he likes Freddie Mac. He's the biggest, I think, individual investor in Freddie Mac. That's not doing what you're doing there, Peter. Well, I can tell you that right now. He's worth about $55 billion, a little bit more than you are, I think. I'm not sure because you own all that gold.
Okay, you guys can beat each other up on the plate.